Vitale, American Retirement Advisors with the Gradient Investments weekly talking points for the week ending August 25th, 2023. Let's get into stocks. Stocks were mixed once again last week with the U.S. benchmark S&P 500 rising 0.84%. The Russell 2000 was down 0.29, but the NASDAQ was up 2.27. Overseas, the developed markets of the EFA declined by 0.18, while the emerging markets gained 0.74. In the U.S., the best performing sectors were technology and consumer discretionary, while the laggards were energy and consumer staples. By style, growth outperformed value, and large cap outperformed mid and small cap. Seeing a lot of back and forth this year. That's why it's good to be diversified in different strategies, because we just don't know what's going to win from time to time. And everybody jumps from one to the other. It's just too late. Have a little bit of everything. That way we're perfectly, yoked there. Let's get into fixed income. Yields rose on short-term maturities of government debt while declining for longer maturities. The benchmark 10-year Treasury declined by 1 basis point to 4.25%, but the spread now between the 2-year and the 10-year widened to 78 basis points from 66 just a week earlier. And this follows comments from the Federal Reserve Chair Jay Powell at the Jackson Hole meeting that did not commit to any actions that the central bank may take at its next meeting as the Fed continues to monitor pressures on inflation. So we're supposed to see them pausing, not raising anymore, or even starting to lower, but they're not going to. They're not going to commit to anything yet. We'll see how that plays out. Let's get into commodities. Prices for industrial metals as well as energy have been holding up well this year. This comes despite a sharp decline in Chinese economic growth, and China's private sector has contributed very little in terms of growth in fixed investments. However, the government sector has been spending, with utility expenditures up 30% and investments in renewable energy nearly doubling. Additionally, China has stepped up their imports of energy, sustaining the global prices for oil, which we can see that at the pump, right? Let's get into economic data. Sales of existing homes in July declined 2.2% from June, led by condos and co-ops, which declined 4.5%. Now, the median price of homes rose 1.9% on a year-over-year basis to $406,700, but was down from the prior month. And the inventory of unsold homes rose 3.7% on a month-over-month basis, but declined 14.6% on a year-over-year basis, with mortgage rates up to 7.09% on average in mid-August versus 5.13% a year ago. So people aren't going to be moving if they don't have to, especially when they're locked in a low interest rate. The manufacturing index dropped 2 points to 47 for July as a renewed drop in output and steeper decreases in new orders weighed on the overall performance of the sector. And some of the decline in the new orders reflects less interest in building inventories since supplies appear to be more available. The service index, meanwhile, dropped 1.3 points to 51. And remember, anything over 50 still indicates growth. So it's still positive about the economy there, although we're still seeing slowdowns. But that big recession everybody was talking about, we haven't seen it. They're saying last year, but we'll see about if we see still things. So let's get into company news. Accenture PLC, which is a G50 holding, rose 5.22% last week. The company will speak at the Alphabet, the Google Next conference this week to detail its collaboration with Google to bring the best of security, utilizing artificial intelligence to a variety of organizations. And AI is huge right now. You're seeing more and more. Also, Palo Alto Networks, which is a Core Select and G33 holding, rose 10.05% last week after the company reported quarterly earnings that were well in excess of consensus expectations. The cybersecurity system firm also issued billings and earnings guidance for the coming fiscal year that exceeded consensus expectations. You're seeing a lot of AI, a lot of tech really hitting it this year. Also, Splunk, which is a Core Select and G33 holdings, rose 18.93% last week. The company reported revenues and earnings that beat consensus expectations, and management also raised guidance for the current quarter and for the full year, along with a rise in annual recurring revenue, which is a key measure of future growth. So that's what you're seeing a lot of. We see how the G50, remembers, are steady, slow and steady. The G33, the Core Select, more growth oriented, a lot of AI. So it's good to have a little piece of everything there. That is it. That concludes this week's market update. Thank you so much for being part of the ARA family. If you need to contact us, of course, call us at 855-756 5700. Visit us online, YouTube, Facebook, our website, AR Advisors Inc., to get the newsletters and update others as well. Remember, now's the time. We're at the end of August. We're transitioning to the fourth quarter. We definitely want to start revisiting, making sure we're in line for taxes. If we need to do Roth conversions before the end of the year, I always like to wait toward the end so we get a good idea of where your income's going to be. But remember, we still got 23, 24, 25 before taxes do go up, what they used to be. So we want to make sure that we're being, proactive and making sure that we're taking advantage of these low tax years. So reach out to us and we'll go from there. God bless you. We'll see you again next week.